All right, good evening, everyone. Welcome to the Market View commentary for the 13th of September. This is going to be a big one. We have some announcements and we have some new stuff that we're going to go over, some stuff that I think is going to be important, some stuff that I think is going to be helpful for you. But today, I am going to call this the big announcement and the Brady lesson for investing. I think this is going to be important for you guys. I think it's something that I'm going to explain on why it's so important, but we're going to be making a change. We're going to be making a change, and the big announcement is drum roll, we are going to be moving accounts over to TD Ameritrade. We are going to be done at the end of this month with Morgan Stanley and E-Trade. We have some problems that bother me. We have some problems that create some extra work that I shouldn't have to do. We have some problems that makes you guys worry. For you guys to get, it's come time for you guys to get some better service and a lot less worry as you're looking at things. What I mean by that is, here's a screenshot. Let's make sure you guys can all see that. There we go. Here's a screenshot, and every day I have to check positions. I have to check positions, and I have to, yes, thank you, Maud. And I have to make sure things are the way they're supposed to be. When you multiply 418 by the 2,400 shares, you come out to the number that you're supposed to have of 10,032. When you're up 44 cents, multiplying it by 1,600, number one, it shouldn't be a negative 520. There's a problem here. If I was to take my calculator and I see 1,600 times 44, because we have 16 leap long call, 1,600 times 0.44, it should be a profit of $704. So I then have to go back and recalculate individual accounts, making sure that the profit side is there or the negative side is there. It's not correct. 75 cents on 2 contracts or 200 shares. When you multiply 200 times 75 cents, it should be 150, not 210. There's a problem. 130 times 2 contracts should be 260. Down 1 cent times 20 contracts or 2,000 shares, it should be down $200. We're up 50. 67 cents times 50 contracts or 5,000 shares. 5,000 times 0.67 is a profit of $3,350. We have 225. Plain and simple. Steve and I are doing too much work to back check actual numbers. And as you go through these, some of them are wrong and some of them have adjustments. What's their response to these issues? Well, it's just a screen and the feeds are not exactly accurate, but the back end is extremely accurate. So what we're doing is we have to run every single one of these positions. Let me clear a little bit of this out. Give me a quick second here. So I have to go through and check unrealized gains, today's gain, 678. This is the back end, and then I've got another back end that I have to check even as well. Whereas, so the first thing that I have to do is Keeve and I are checking this number with this number. And a couple times they're different. And when they're different, we have to go through and find the positions. It's just frustrating as all get out, because the 350 calls here on the back end. I then have to check with the index. I then have to check against what we have here. It says they're up 44 cents, when in reality, time decay, they were down 33 cents. That is a 77.5 cent difference from what you guys are looking at. Let me do that again. I'm sorry. Thank you, Keeve. Thank you, Maud. So one more time. I have to check back end against my back end number here and making sure that they match, right? And then as long as they match, I then am having to check like Baidu calls. Last change 28. When I had the ending number, it showed it was down 28 cents. But when I go to our back end numbers, it shows that we're down 33.5 cents. So then I have to go to the index and see what the index numbers are. Which is correct, 28 or 33. Most of the time it's been 33, occasionally it's 28. So then I got to go back to all of our positions and have E-Trade make the adjustments, which means I'm up at 5:30 in the morning and they get all kinds of really pissed off that they've got to make adjustments in your accounts. Every single day, Keeve and I have been checking back end numbers. And we have to do it for, geez, 78. We've got to do it for what, 94, 96 accounts. And at least we're comfortable to make sure the numbers are adding up, back end and front end. But then if there's something in between, we now got to go check the index and check index numbers, which is like back end. It takes up a ton of our time. We're not moving because of the time. We're moving because they should have kept the programmers and had the bugs fixed in these accounts. It is not correct. When we do all of our joint accounts and look at it as a group, it's even worse, because that same position showed as a net that it was up 44 cents. That's a 77.5 cent difference. Our numbers are not where they should be. For that reason, not to mention little better customer service, not to mention some people 2 years in a row have received 2 1099s. I love Mike Lamagna. He is amazing. I have an account rep there that bends over backwards that gets all of these fixed like there's no tomorrow. But you guys shouldn't be looking and scratching your head and going, what the hell is going on here? Why are the numbers not adding up? It's simple that Morgan Stanley bought E-Trade. They did not keep enough programmers to keep Powertrade in place. In all honesty, I'm going to go on record saying their thought was with their 1.4 trillion from E-Trade, they would move all of that over to their in-house service, where all they're going to offer are the boring mutual funds. Hey, if your market's down, don't worry, it'll come back. You're not supposed to do anything else. The short answer is we're done. They should be able to get your 1099s out by January 31st. They should not be arriving at your house mid to end of February. I should not be calling you mid to end of February and say, hold on a little bit longer. They're sending a revision out. We are done. We are done with E-Trade. We're going to apologize up front, but the good news is DocuSign is able to be used through TD Ameritrade. We're going to be moving all of our accounts out of E-Trade, out of Morgan Stanley, and over to TD Ameritrade. With that said, Keeve and I have a bit of a learning curve. We're going to be really going to work 8 to 10 hours a day to learn the new system. A platform is a platform is a platform. There's really not a problem, but we need to know the nuances inside and out so we can be able to share that with you and help you guys understand what's happening. There is TOS, the Think or Swim program. We will not be using that because that is not compliant with being able to do group trading as of right now. But they are working on a dumbed down version of it. A dumbed down version of it that's going to give you guys the ability to have some more power or some more opportunities to back test and to have more buttons to play with inside of your own platform as you're looking at things. Not only that, most importantly for me, the numbers have to add up. The numbers have to add up, and there's no reason why I should be coming back to you guys saying, looks like 1099s are going to be 2 weeks late. Looks like those first ones are sent out are not accurate. They're sending out the correct, accurate ones. Hell, end of February, beginning of March. Inappropriate. Yes, we did have our tax turn-in season get pushed out in time. Still, not what I'm looking for. So off we go. 2 questions were asked. So do they care that you are moving the account? Yeah, I mean, anytime someone loses $25, $27 million, yes. The reality, there's probably a mass exodus of somewhere around $900 to $1 trillion leaving. They're going to be leaving E-Trade, and they're going to be moving off towards TD Ameritrade. So the good news is I hope Morgan Stanley enjoys what they have decided to do. And the short answer is other brokerage are going to be receiving about $1 trillion of business that independents don't want to be pushed into. Target date funds. We don't want to be pushed into mutual funds. We want to be able to protect people to the downside. We want to be able to use our own systems and methodologies that we've developed that have produced much better results over a longer period of time than the buy and hold. Again, over and over again, averages are not your friends. So congratulations for Morgan Stanley. You bought a competitor off your platform. You bought a platform that was superior to yours. You let it go to waste, and you didn't pick up even half of what you expected to because people aren't willing to do it. With that said, I called this the big announcement Brady webinar today. So let me put this one. So over the weekend, I was out in Denver with Brady. And to let you know, the name has been changed to protect the innocent. But over the weekend, I was out with Brady. Great guy. Father had huge business, made a ton of money, huge family trust. Really, I was out there because I truly enjoyed this guy on the phone, right? Love the guy on the phone, and my plan was, hey, kind of is cool to have a friend in high places with big trusts and all those kind of good things. So went out, love the guy. He likes to golf, and basically We golfed Friday through Sunday, ate at expensive restaurants, and got to know each other as friends. Not everyone have I even been able to go out and see with COVID, but pretty neat to go out to someone whose family is worth hundreds of millions of dollars. And again, I'm not telling the last name, and the first name has been changed to protect the innocent. Anyway, great time. We got to see the Scottish castle that was made out in Castle Pines area of Colorado. Excuse me, kind of had a little brain fade there. But there's a but to this story. But as I was trying to make sure to pay for all the food and fun, right? There was one time he slipped his card in. I said to the waitress, no, you want to take mine? There's nothing on his card, which is funny because obviously he's worth hundreds of millions or what have you. And I said, no, take my card. And he looked at me, he's like, why are you paying for everything? And my comment was, well, I'm here to earn your business. I'm here to earn your business. I'm going to share what I do. I'm here to earn your business. And his comment back was, what do you think? What do you think his comment back to me was? And I'm going to pause you while I type it in. What do you think his comment back to me was? Just out of the blue, right? Trying to be a nice guy. What do you think his comment was back to me? Thank you. Can I order the lobster? I think that's funny, David. Thank you. Can I order the lobster? Yeah. What do you think his comment was to me? There you guys go. Tried to pause it, but I'm just going to go ahead and let you guys read it. His comment to me was, oh, I thought it was because we were friends. And I sat there and went like, that's the reason why I came out. The reason why I came out is because he sounds like fun. He's smart. He likes to golf. Really, it was a neat opportunity to be able to meet someone like him that genuinely is a really, really good guy. I was trying to say, hey, it's a business write-off. I get to write all this off. Let me write it off. What I said was, I'm trying to earn your business. And very politely, he reminded me one more time why I do what I do. I do what I do because I consider all of you friends. I do what I do because I've seen how it helps people with their portfolios in the market. I do what I do because I don't lose clients, because on down days I'm making phone calls, we do webinars. I truly am trying to treat your money like my own. Everyone that's here tonight, I've called, I've talked to. There are a couple of you that have given me some gifts. There are a couple of you that have suggested trades. There are a couple of you that have needed help with education. There are a couple of you we've doubled portfolios. There are a couple of you here tonight that we have quadrupled portfolios over the periods of time here. But what it really comes down to is I do what I do because I believe it helps people out. And I consider my clientele, honest to goodness, you guys are my friends. You're people that aren't just an acquaintance. You're people that just aren't a client. You're people that just aren't my income. You're just not along for the ride. And it stopped me. In fact, I probably got quiet, and Brady was kind of like, did I say something wrong? It's like, no, once again, you taught me a lesson. What I was trying to say was, I write all this off for the business, and you're right. I was getting a golf weekend with a guy that I met for the very first time that has some amazing stories that beat any story I think I've ever had or come up with. Any experience in my life, this guy tops it, no questions asked. When I said, I'm trying to earn your business, he came back and said, I thought it was because we were friends. And my answer should have been immediately, yeah, of course. And instead, I waffled a little bit. I waffled, and it was another life lesson taught to me that, hey, this is why I'm doing what I'm doing. I'm doing this because I feel like I can give any one of you a call. Sometimes we go through these webinars, and you guys can know I'm bummed. I've got some of you here that have given me parental advice. There's some of you here that have given me health advice and doctoral advice. And I'll be honest with you, I'm a bit prideful. I like the fact that I can give you guys a call and on small accounts say, hey, we doubled your small account. Hey, if you don't mind, can I ask you, because you mentioned, your son, what do you think about this? What do you think about that? I've truly enjoyed getting to know each and every one of you on a level that's much more than just business. Much more that at least I feel that way, that's much more than just, hey, I'm going to make money off you. It's there for reasons to protect you guys. It's there because I've seen this go through a 2008 scenario. It's there because I'm scared to death about the market, and I think we're going to go through a Great Depression. It's there to do everything I can to make your lives easier when it comes to the stock market. The question is just asked, so did you get some business from him? Of course I did. In fact, I'm going to get a lot of business from him and his friends. But more importantly, he reminded me that I don't do this because it's business. I do it because you guys are my friends, and this is the most excellent way I know how to treat a friend, is to help you in an area that most people don't get the help that they need, and in a way that hopefully will have a significant impact on your future. He didn't even realize what he said. He didn't even realize how I felt when he said it. He didn't even realize how I took a step back inside and went, you know what? You got to keep being yourself always. I don't feel like I was trying to be someone else, but that comment that I made was not the comment that should have represented who I am in Hurley Investments at that dinner. I knew he could afford, to pay for everything, but that was besides the point. The reality is, what I should have said, what I should have done was, hey, thank you. I've got it, and I don't know. I wish that was one I could have back. I truly wish that was one that I could have said something differently. And because of that, though, I'm here tonight to tell you guys, thank you. Thank you for being who you are. Thank you for allowing me the opportunity to work for you. I know if Key was here, he would be saying exactly the same thing. But I want to say thank you for being more than just clients. Thank you for being my friends. And as my friends, I feel extra responsibility and extra incentive to make sure that your money's taken care of the way it's supposed to, and extra incentive to make sure that we do the best thing that we can for you guys in protecting your money and protecting it in downturns. With that said, I'm giving you a heads up. We are approaching September 17th, which usually / historically is the start of a 6-week downturn. And with budget constraints and so far this year, expect us to start adding more long puts for this time period to protect stock ownership. And that's the route that we're going to go. I found an interesting article that I'm bringing up. Bank of America's reliability model indicates negative long-term returns for the first time since 1999. Anyone know what happened in 2000 and 2001? Some market crashes, right? Some corrections. And that was just changing from a long-term positive return to not such a long-term positive return. But basically, this model suggests that the S&P 500 will return negative or lower returns in the next 10 years than it did the previous 10 years. Doesn't mean that companies aren't still going to make money. It's just that they're not going to make as much money and will have zero growth over the next 10-year period of time. What does that mean for us? Well, that means something very important, but this means, plain and simple, and let me get this so where it's going to be able to be seen. So this means stock picking, valuations, and growth potential are the only way to beat the S&P 500 moving forward for the next decade. You've got to go find those cheaper stocks there to give yourself the opportunity to be able to beat the S&P 500. It's going to get a little perilous down the road. With this said, just as another thing that came out today, expect your taxes and corporate taxes to go up. Corporate from 21% to 26.5%. Personal up, and this is the garbage thing, expected up between 3 to 4%. And it's not 3 to 4% of what you're already paying. It is 7% will now pay 11%. So you're going to see taxes rise for you guys about 50%. A 50% rise in taxes is going to most likely affect your pocketbook sometime into the future. So be ready for a rise in your taxes that will affect your taxes by as much as 50%. Especially if you're in that 7% tax range. If you're at 22, I'm expecting to pay 27. If you're in 27, expect to pay 33. If you're already in the highest of 33%, probably expect to pay back up at that 39%. Or excuse me, I guess it's 37%, isn't it? So that's what's being shuffled. The good news is it won't come in the stimulus bill. It won't come with the stimulus that is ahead of the tax reform bill. So first we'll get some stimulus. Hopefully that comes the end of this year. Chances are it'll probably come the beginning of next year. That's going to move us a little bit higher. All right, what else? Someone asked here recently, Kevin, where do you do a little bit of research? And I talked about volumes. Volumes you can find on briefing.com, and you can go to stock market update. Also, here's where the big picture is that I've used in the past. But the stock market updates, where you're able to see how the markets are doing. This is where I pay a little bit of attention on the volume. A little bit where lack of trading conviction, volumes were down a little bit today from the average. It's also kind of neat that when I go to briefing.com, it usually has a little recap at the end of each day too, just if I want to do some reading. We couldn't understand why Under Armour took a big hit today. It appears because Nike was downgraded. The interesting thing, though, is that Nike gets their materials more from South America. Under Armour gets their materials and does their production in Asia. So Under Armour took a bit of a hit today. But someone asked you recently, where am I checking volumes? I said the CBOE. I also check volumes on a daily basis here at the end of the day. I just do a little reading research on briefing.com. This is also where I go to my calendars and I get my earnings calendar. I always check it for the week. This is where I get 5-6 weeks out in advance. This is also where I get my economic calendar. And same thing, I get it 4 or 5 weeks out in advance. And I write it all in here so that I am prepared to understand what's happening in our markets and where we're going. Obviously, Treasury today, briefing forecast is that they would they would spend $185 billion this month. Hey, they saved us $14 billion. Their budget was only down by $171 billion. Way to go. Way to not spend a ton of our money, right? So just some help so you guys can see where I get my information from. All righty, as we keep going through market recap, I'm going to let you guys go through that. Where all our markets end this week, I'm now going with lower. And I'm going to probably go with lower for the next 4 to 6 weeks. If I can put in here our charts, I don't know why I didn't. I should have. Screenshots, catch up. The Dow has broken the 50. Another reason why we're now looking to add some protection on, but we are technically bearish on the Dow. We were bullish on the S&P. Take a quick peek at this chart. Does not look muy bueno. The S&P trying to hold our pivot point, went under and it's flat. We did cross down below. We haven't quite crossed on a 5 and a 20. We are still technically bullish, but the expectation is we're going to come down and at least have to test the 44.27 range, which is our 50-day simple moving average. It would not surprise me if we come all the way down to 43.08 and test the S2 support level. And then last but not least, we have our Nasdaq. This one also looks like we are rolling over on the index. Not what you want to see, especially this time of year. But we're rolling over. We're not quite bearish, but it would not surprise me if we see ourselves become bearish by the end of the week. And we'll probably start to test the 14,837 and the 14,692. That is the expectation as we run into some seasonal selling and some pre-last quarter of the year selling to basically rebalance the portfolio more for a Christmas earnings opportunity. All right, Hurley and S&P, I said down 1%. I'm looking at probably changing that in the near future. It all depends on the 50-day bounce though. So it depends how we hold the 50-day, but I would expect to be changing my expectation for the month to a lower number than where we're currently at. So just something to be paying attention to there. Earnings, Oracle and JKS, not a whole lot of earnings is happening. Economic reports, really nothing coming anytime quickly except for Thursday. Retail sales, which are not looking to be spectacular. The retail sales numbers are retail sales down 0.7 and retail sales down ex automobiles 0.2. So we're expected to lose 0.7 month over month on our sales, on our retail sales, and lose 0.2 on our retail sales minus the automobiles. Monthly options expiration for September options are going to expire this Friday. Keeve and I have to be watching our computers and we'll be actively getting ready for positions. How am I looking to trade? The simple answer is long put protection is going to be added in the very near future. I don't know what it is. Kramer was speaking today. I caught it briefly in between some appointments. Kramer on Mad Money today spoke of the historical, and he said September 17th. I don't have an exact date for it, but the historical sell-off that usually starts in September goes through October. So if you want to hear more about this historical sell-off, Kramer on Mad Money mentioned it and talks about that date being September 17th. I don't have a date for you, but there's reasons and explanations behind it might be something good to listen to. Morgan Stanley warns of a 15% plunge before the year end. How do they suggest you protect yourself for this plunge? You should shift out of items and favor financials, consumer staples, consumer services, and healthcare. These companies usually have dividends. So here's what they're saying. We think you should be in these items and be in them for the end of the year, which is a little funny because I think healthcare took the biggest hit today. Week were healthcare, utilities, and materials. Yeah, healthcare took the biggest hit today in the 11 sectors. So I did find it interesting that this came out, and really, healthcare's taken the major hit last week too. But they say you should like Bank of America. Glad to see we're already in it. Consumer staples are saying PepsiCo. So apparently Mountain Dew and Gatorade are going to be really good. Target. We've already played in and out of Target. Glad that we see ourselves there. Healthcare, Johnson & Johnson. I don't know. I did find it pretty interesting that they're giving actual picks as they're calling for a bottom. At least they weren't telling you to go put stuff into bonds. GM doubles chip shortage impacted 200,000 vehicles second half of the year, maintains guidance. I think I've shown this to you already, but I still have it here. 4 perfect stocks down 50% or more from their highs to buy now. In fact, I think these were all last time. So I probably need to work on getting some of these out, actually. I'm sorry. I found an interesting article in my local news. Your money is better to be reasonable than rational. This is the gentleman that typed The Psychology of Money, or wrote the book Psychology of Money. All I'm going to say is this, to treat it as easy as possible, or to give you an explanation, to make it as easy as possible. Humans are wired to avoid losses, and some are wired stronger than others. So your risk tolerance is the ability to weather ups and downs in the stock market while sleeping well at night. You need to be prepared for the upcoming volatility that we're expecting in our market that is a seasonal volatile time frame. He also suggests you invest in things you love. In fact, this guy will even invest in it for you. He suggests you go to cash and bonds, which is kind of ridiculous. And then I found the fact that Warren Buffett's winning equity portfolios concentrated just 4 stocks. Here's what they are. Taking a guess. Apple. Glad to see that we're in Apple. He has a gigantic stake in Apple. That is by far half of Warren Buffett's growth in Berkshire Hathaway. Second one, big stakes in American Express and Bank of America. We're choosing instead of American Express because it hasn't moved nearly as much as Visa. We're playing Visa. And then his longtime bet on Coca-Cola. We are typically not in Coca-Cola because there's more and or better growth stocks than Coca-Cola. But very nice to see that if you want to go to like 72%, I think I was running, 72% of his stock runs in those 4 positions right now. Apple, which is over 50%, American Express, Bank of America, and Coca-Cola. Glad to see that we are definitely in 2 of those 4. The numbers don't make sense for American Express, nor do they make sense for Coca-Cola. With that said, what questions do you guys have? What questions can I answer for you that you might have in regards to the stock market right now? Knowing our expectation is that we're going to add some long put protection very quickly to portfolios, if not starting tomorrow. Let me give you guys 30 seconds to be able to type anything in. So Kevin, are you going to just blindly add protection tomorrow? No, we're going to take a look. We're looking at charts. We added some protection on Apple already. So Apple has protection. I feel Baidu will probably need protection relatively quickly. But Apple definitely has protection on it. Good call. We got protection way up at 150 or 151. Under Armour. Going to be a little bit chippy here. We're right at that 22. We see a bit of a down day tomorrow. 22 long puts are going on Under Armour. Visa seems to be doing okay. We're going to let it go off of the 220 level. If it breaks 220, protection is going to be going on. Disney still doing okay. We're not going to blindly go put protection on Disney right now, but we're paying attention to the 185 level. It's we got to watch what we're doing on Disney. For those of you that like Facebook, watching it, no, we're not blindly putting protection on Facebook yet, but we are watching the level closer to 170. And Boeing individuals. Boeing really close. We were almost throwing protection on today, but we had an up day, so we're going to sit back and see if we continue the bounce. It could be a triple bottom. It could be building a base, but we're really close to putting 215 long puts on Boeing for a run down to that 195 range. So the short answer, no, we don't blindly do anything. That's foolish. That's not smart investing. It's not a smart way to protect portfolios. We do the best we can to manage risk in individual portfolios based on individual stocks, not a one size fits all and just throw stuff on. Sorry to put you on the spot there. Any other questions? If not, I'm going to go watch a Raiders game. Kind of excited to see my Raiders playing. Perfect. Thank you, Jim. And we will go from there. In fact, Jim, I'm going to give you a quick call when we're done here. All right, guys. Hey, appreciate your time being here tonight. Hopefully this was helpful for you. I will have this posted sometime later this evening or tomorrow morning. You let me know what works best for you, and we will go from there. You guys take care, and I will talk to you later. Bye-bye.